Well, bankers are actually quite concerned in our survey, and this concern's been growing throughout 2018, and it's ironic because, quite honestly, 2018, as Warren Buffett mentioned, was a pretty good year for banks. They had record profits, they got regulatory relief from Congress, and they got the tax cuts. Yet our surveys are at its lowest point since we've been doing this since 2015.
And just remind us how many people you've surveyed and what levels they sit at in these banks, because as you said, I think your survey says that as much as 80% of your respondents think that a recession could take place at some point, either in 19 or 20.
That's right. Well, there's about 5,000 banks in the United States. We had about 447 responses here, so that's fairly good survey numbers. It's all C-level execs, primarily CEOs, presidents, and a few CFOs in between. It's a little bit skewed towards smaller banks, because after all, smaller banks make up the majority of banks in the U.S., but we give a nice cross-section.
Paul, I understand here that the Bank Confidence Index dropped to 43. That's the lowest ever recorded by your survey. When you're talking about the Bank Confidence Index, what's in that? That's not just the prospect for recession, but that's sort of the banking business in general. Is that correct?
That's absolutely correct. It is at its lowest point, 43. 50 is sort of the equilibrium point. It has been dropping quite consistently throughout the year. What comprises it is demand for deposits, loan demand, which has not really reached the levels that banks have expected, access to capital, access to funding. On all these things, basically banks are sort of becoming a little bit queasy about what's happening out there.
And Paul, on the sort of more medium-term, long-term structural threats that bankers fear, it's still cybersecurity more than anything else.
Absolutely. Cybersecurity is way up there. Some challenges from fintechs. Interesting, a couple surveys ago, we asked a question about Amazon. They were actually the number one threat at the time for banks in their view. But cybersecurity is huge, and it has remained huge. But banks have actually been investing quite a bit in cybersecurity at all levels. So I think they are wary, but they also feel like they are putting a correct proportion of their budgets towards cybersecurity.
And Paul, as you mentioned, your survey focused more on some of the smaller regional banks. Was there a regional difference in the respondents? Any areas that are more or less pessimistic about the outlook?
It depends on which particular part of the survey you're looking at. The Northeast has kind of traditionally been a little bit more pessimistic than, say, the South or the Midwest in our surveys. It fluctuates sometimes, but generally they tend to be a little bit more cautious about what's going on and about the future as well.
I know that you mentioned that loan demand has not been as high as some bankers had previously thought. Is that largely just because we're seeing interest rates rise, or are there many other factors at play there?
Well, interest rates are rising, but actually I think initially the banks were happy that interest rates were kind of reaching some sort of normalcy. Now they are much more concerned. But yeah, I mean, generally the Fed survey just came out actually just a few days ago. It kind of confirms what we basically are seeing, which the banks just have not felt that loan demand has really picked up, and they foresee basically a tightening of standards going into 2019.
Also, overall, a relatively pessimistic outlook. That said, were there any questions or responses about how confident each of the individual banks feel about their own future, even if we were to see a downturn in the economy?
Well, I think the banks are cautious, and I think they feel good about the economy in general. And I think they feel better positioned for, if there is any kind of recession than, say, 10 years ago. So in that sense, I think they're feeling better, and I think and they're feeling a little bit more prepared.